Today we're unlocking a powerful trading skill, reading price candle by candle using imbalances. If you want a sharper market bias and more precision entries and exits, this approach is your guide to trading with confidence. Let's dive in. So continuing with the basics playlist, we're going to look at now reading a candle by candle approach with this pound CAD daily time frame. Now we're going to incorporate the use of imbalances. Now we're going to look at these blue and red candles to use the imbalance on the chart, and we're going to start to understand reading the trading range and those imbalance areas for potential bias in the market, for potential entries, and even potential targets. So our current move here is from this high to this low in the market. Let's start with this as our current trading range. The market has been pushing up against this move to downside, and this is where we can mark off this last area of imbalance where we just held at that area. So until we see price closing through this level right here, we're not going to see a continuation higher, and we could see a pullback first. So we'll go forward with price, and I'll show you this candle by candle so you can read this yourself after this video, and it's going to help you to understand a bias in the market. So let's go forward with a candle by candle. So we have a push down. Okay, now we've created a new bearish move, so we can mark off from here a level and another level. So we have two imbalances being created on the way down. Now the reason we like to use the imbalance zone is because it creates an area of liquidity within a trading range. We have external liquidity outside the range high and low, and internal liquidity within these candles. Let's continue forward. There's that next candle now turned red. Now what we need to see is if we're going to continue higher, we've got to close back above this area. Now we could hold and just wick through and see continuation down towards this low. Go forward so we can see what's happening. We've actually reacted off this area and pushed back down. Let's see if we continue to push lower. So we do push lower, and you can see how reading these areas is going to help you forward direction. Now what we'd be looking for is a lower time frame entry model off this area just to run this low, and that would have worked out fantastically well. Let's go forward once again, and I just want to show you exactly how we can read these candles. So now we create this sweep at this low in the market. So this is a market sweep where we push below this low and we push up, we close this level. That suggests we're going to run this next level, then head up to this one once again. So let's go forward. So we had a pullback. We've failed to run up to this level. We've held then at this area on this zone. So price is actually held, and now right in this area after we see this down candle, that would suggest to me we're going to run this low and potentially continue to run towards this low. This is held price, and it's down here on the lower time frame, which we'll go through in another video. In fact, if that's a video you want to see on using some entry models in this basic playlist, let me know, leave a comment below, and we'll do a video on that in the future. Let's go forward and see if we can run this low on a candle by candle. So you can see we're pushed back up this time. Now we wick through the high again of this zone, but we haven't closed it. Until we close through this level marked, this zone, we cannot go any higher. Push forward. Now we created a bullish zone. This is key, and we're going to identify this candle's wicked back down into that area, and now we've had a push higher. So this is showing me more bullish price action, but we're still waiting to see a close of this zone. We already closed the first one. So let me just show you, we had the first zone here. We closed it, we went down, we made a higher low, and now we're pushing up towards this one. So we're now a full fill. We're looking for a close through for continuation higher. And now we get that continuation higher. So now we're looking for any pullbacks into this zone to run for this high, potentially this level, and then to run this high. And that's how we can start identifying a directional bias here. So there is a wick to downside into that zone, which then you can see this turns into a blue candle. But this is where you'll be looking for an entry to now run to there on a lower time frame. So using the candle by candle approach, and there we go, we've now wicked into that level. And look at the reaction again, and we have a bearish move down. But I'm still expecting to see a continuation to run this high at some point, but not until I see a close of this level. We're holding. Now we've closed. Now we expect to see a push through that high. And there we go. We're going to push through the high. So our external liquidity has been run. So right here, let me mark this out for you. Right this area, we have external liquidity. Let's just do EL. Okay, so external liquidity sits above this high, and we have internal liquidity within these candles. So I'm still looking for a push through, but we could see this new area of imbalance, holding price and pushing it higher once again. So we do, and we push higher. So that's how we can start reading for direction, okay, through these levels, and for entries, okay, out of these imbalance areas. And we even went through the potential target at those highs when we saw this pullback into this bullish imbalance to run to that next level. So now this is our trading range. Okay, we're going to move up as price moves up. So this now has been removed. We can also remove all of this off the chart. And what we can now start to do is understand that this is our external liquidity. Okay, these areas in the market. And we're waiting now to see if price is going to give us a potential reversal. So we need to look for a reason. And we start to see this candle wicking above the previous candle's high. And this is going to leave an area of bullish imbalance once again. So we've wicked into that imbalance. Are we going to hold and continue higher? We'll use the lower time frames, but we've just closed at the zone. We need to see it close through. Okay, so now that's closing through. That suggests now we're going to run this next zone below this area here. So any lower time frame entries you find here, you've got space to run to this next area. And price is holding, and now we've pushed through. So you can see how price held, went up once more, swept above these highs internally, and now we've got our next imbalance below. This one's been closed. So our current trading range is this move, and we have a smaller range within. So we could even use this as an area, but this is our main range. This in fact is a great low in the market, this low or even this low, where we could see potential liquidity being run within that range. So we can mark that off. But right now we expect to see continuation to that area, and we get a nice wick through. But what we now created on the way down, we can mark out is a new era of imbalance. So we have this imbalance, which again, we saw previously working well for buys. This could work well for sells against this range that we're within. So let's go forward with price candle with candle. We pushed up into that area. We're holding around the 50% area. Let's see if it's going to hold. And we have pushed back down from it. And we've now pushed through, removing that zone. So now we do have this leftover zone of imbalance. And we have a very small zone right there as well. But at this point, price has now got to go to this smaller zone below. And we're going to run through, see if we're going to pull back first. We do pull back first. And we've wicked in. We've pushed through. So we actually reversed this candle. Okay, this smaller imbalance, push through this one. Looks like we're going to push up now into this imbalance. Let's see if we're going to hold at this zone. It's a nice looking zone still that we could push back down from. And we still haven't got to this zone. We never even pushed below into it. I much prefer to see price pushing into this zone, then see this strong move. So you may have come to this chart yourself, perhaps in the past. You have seen this strong move and you're instantly believing we're bullish in the market. For me, we're not fully bullish there yet. Let's go forward and see what happens. So we've just pushed up into this imbalance, looking for a reason for the market to want to sell off. So we have just created this bullish area where we could bounce from for potential buy. So we pull back, not quite. Now we've wicked through that zone, but it still looks quite bearish. And we've also held at this zone. We haven't closed it to signal the price will go higher. Now close back through this zone is going to signal we're going to run for this area on the chart. That's our internal liquidity based on this area of imbalance. So let's see what happens. We're holding. We've wicked back up again that high. If we close through, we haven't yet. If we close through, then we're going to run up for this external liquidity. Now we've closed back bearish. That signals we're going to run for this area. Now, if we close this one, we would even go for the next low down here of liquidity. So this is where you'll be finding your lower time frame entries using structure in the market, understanding trends on the lower time frames, like I went through on the first video in this basic series. Now, the video after this one, you're going to be able to learn more concepts applying the imbalance and with supply and demand, and also using structure. So now you can see we have a nice push down and we've closed through this area. If you're getting good value right now from this video, and this is giving you a way to look at the markets in a completely different way, then you may be interested in joining up to the 90-day trading profit system. And right now it's open until the 31st of October, at which point we will be closing enrollment for the program and we won't be open again until February next year. So it's something you're interested in, check it out. There'll be a link below in the description of this video, one above now as well. You can go and check it out. If it isn't for you, then keep watching. I hope you're getting some great value in today's video. So now we see that closed through. This imbalance has been taken. Again, this is giving me a bias that now price for me has got to run this low before I can see any bullish move for liquidity. So at this point, we've got this area here. Price has failed to close through, but it's been fully filled. So for me now, there's nothing there. And it means I've only got ready some equal highs the market's going to want to run. So we have some area of liquidity that we can mark out just there in the market. Now, if I mark this out as an area of liquidity, you'll be able to see what I mean. So this is where I expect price to want to run at some point, some equal highs. But before we can do that, we need to see some external liquidity taken. Now, we have this external high, we have this external low. But we can also use this as an external low based within this full swing. So we can see from here right now, a push to the upside and a current pullback. Now, if we can run through this low on this swing low, then we could see another run higher straight to take out this high and this internal liquidity here. So let's go forward candle by candle. So we've pushed straight down. Now that has left over an area of imbalance here. Let's go forward again and we get a straight reversal. So see how the market is pushed in below this low and we created a reversal straight away. So now we have potential two areas the market's going to want to target. First is this level, and then second, this high. And then eventually we want to take the external liquidity. And that is how we look at a candle by candle approach. Just using the candles on the chart, using the range of external liquidity and those imbalanced candles for internal liquidity. So right now, I'll be looking for a push up, pull back continuation, or what you can do, you can wait for the market to reverse this imbalance for probably a higher probability trade. So let's see what happens. We do push up. See, we've reacted off that level. Look at how price reacts off these levels every time. Now look what's happened. We created this bullish imbalance. Prices pull back in. Now I expect to see a run of this level right here to continue higher. And we do. So that's using the imbalance for the reversal area and the entry. Now I expect this area of liquidity to be run next. That's where I want to see price go. We're going to create a new imbalance as well on the way up. So we have a new imbalance marked here. We could see a pullback into that before we continue higher. See what happens. We do get a pullback into that area. We actually reversed this imbalance first, pull back into this one. Now you'll be looking on the lower time frames, using structure, understanding trends for another entry long. We get a potential pivot and it looks like we could run higher. So we're holding sideways. We've actually swept the low, but still we haven't closed this imbalance. If we do, then potentially we could go for this next one below, but let's see what happens. We have closed it. So now we want to see a push down at least to run this low, unless we see a reversal of another imbalance again to the upside. But we need to create a new bearish imbalance. So the market has pushed up quite strong after the push through. So we could see a continuation, and looks like we're going to see a run up now to take this internal high. So these internal equal highs has now been run. So you can see how beforehand, we knew from down here at some point we'd have to run these highs. Now we've closed it, the external liquidity is next to be run. And you're just looking for a new era of imbalance. Okay, we've now created it. We can look now for a pullback into this area to run for this high. Let's see if this is what we get. So we've created that blue candle. We just need to see that pullback. Unfortunately, we didn't get one, and we run the external liquidity. Now that's just showing you quite simply, we're using external liquidity for that range. Now as price continues higher, we can mark off a new high and new higher low. So this is our new higher low in the market. And as we continue to run to the upside, there will be a new high created. Let's just go forward with price to see what happens. So we'll be looking for a reversal. You can see how we actually reversed straight back up off this previous external level. Very often you'll see those areas hold. We're looking for a pullback. Okay, so there's a first sign of a pullback. So for me, this now becomes my external high. So there's the continuation with the trend, and you'll be having these areas of imbalances. You'll be looking to see if price holds or close through. You can see right now we are holding at this imbalance, but now we're creating a bearish imbalance here that we could push up into. First, I'd like to see a push through this imbalance, then a push up for an entry to sell. And then we'll be looking for continuation lower towards these areas down below. Okay, so mark these out quickly. You can see where they are. So let's see if we do get a push through first. So we've got to push up first into that bearish imbalance, and then we've got to push down. So again, on low time frames, you're going to find that there's structure here giving you potential shorts. Now you look for a run to this next zone below. On the pullback, we push through, look for the next one below that. And we just tagged it and we've held. So now we can look for, okay, a new imbalance has been created right here. We already pushed up into that imbalance on this candle. See if we hold, and we have held and we pushed up bullish. So from this point, we can see it close through this imbalance. Let's see if we're going to test the high. Right, so we've just closed straight through that imbalance, signaling we're going to go higher now to this next zone. So that would be a potential full zone we're looking to fill. If we get through that, we expect the external high to be run. So we've just had a full fill. Look at how price came to the pip again. Look at that accuracy you're going to get from this type of trading. So now we've got basically a full fill. I expect if we hold at this area of bullish imbalance with a new potential uptrend on a lower time frame, then you can see the 50% area potentially could hold. We could see a run for this external liquidity. And we do get a hold, and we run straight up for that external liquidity. So this is reading price like no one's going to show you. I do hope you're getting some great value from this, and it's helping you to understand why the imbalance is an important aspect of your trading. Again, if you want to take your trading further, to be able to read this type of price action, we could cover this inside the 90-day profit trading system and inside the pro community. Then do check out the link in the description of this video, or there'll also be a link at the end of this video where you can check out the 90-day profit trading system. And make sure you watch the next video coming up in this series on basics of trading.